Welcome to PPP Loan Fraud. I'm Bob Coleman, editor of the Coleman Report. Today's criminal I want to talk about is Robert Ben-Levi. He also goes by Robert Levi, 53 years old, out of Encino, California. He was charged, he was sentenced to a $27 million PPP loan fraud, received 11 years in jail. First thing I want to say is, look, when they say $27 million loan fraud, the crime is when you apply for a loan and you apply with a federal bank. He received $3 million. The rest of the $27 million were loans he applied for. So when you hear these numbers being thrown about, you understand how much actually was dispersed by the lenders. There were 4 lenders involved: Bank of America, who funded the $3 million, Web Bank, who funded the loan through his PayPal request, Wells Fargo, which denied the loans, and U.S. Bank, which also denied the loans. So he got, the crime is when you apply for the loan and your bankers are like the FBI agents. You can't lie to them. And when you make a representation it's not true, it's a crime. So I always like to determine what he did with the money. So of that $3 million, he used for personal expenses, cash withdrawals, payments on personal credit cards. And we always like to see what they bought. This guy didn't buy anything. He just rented an oceanfront apartment in Santa Monica. Now, what happens is when you have these cases, the feds go in, they attach everything they get. We don't know how much is recovered of that $3 million. And there were no hard assets. Usually we can get condos and Lamborghinis in play. So he was charged, and the gentleman is from Tehran. And I want to read you some things about him which added to the sentence. First of all, he was a career criminal. Quote, defendant has had a substantial criminal history that results in a criminal history category 4. This is from the sentencing memorandum, including convictions for theft, forgery, entering a non-commercial dwelling. Isn't that another word for house? I don't know. As well as multiple probation violations. So this fraudster saw the program. Remember, the program came out April 1, 2020 approximately, and he figured out the fraud. Now, what was the fraud? He said he had a number of companies that had 100 employees, and his payroll was, let me get the right number here, average monthly payroll was $400,000 a month. In the original applications, you could get a multiple of that payroll, and therefore he said he had total companies from the IRS forms were about $5 million. But he created multiple companies: Ultra Health LLC, 4 Health Wonders LLC, Joyous Health for You, One Stellar Health, Best Ways to Health, 4 Stars Collection, 2GR, 2 Great, 2GR8 Health, and Top Stars Health. It was all bogus. He photoshopped all his employment records, and during the trial, they brought in experts to say, none of this was true. And it's the type of case he got away with it once with $3 million. He thought he could do it again. So the fraud was creating these false statements, applying for the loan, and that was the crime. Obviously, the crime was also receiving it, but that's what we had. Now, this is interesting. I think we need to keep this into perspective, and this is my soapbox, in that there's always 2 sides to every story, and you read a lot of these salacious headlines or whatever, but you have to look at context. I'm a history major. Obviously, I got an MBA in finance, but my underlying degree is history, where we're looking for context and what was happening. And remember, this is from the sentencing memorandum. To try to alleviate the significant impact of COVID pandemic on businesses, the federal government created the PPP program to help small business financially survive the pandemic. The funds were intended to keep business owners and their employees above water. In order for that to work, it had to happen quickly. The PPP loans do not require the same vetting and due diligence required of normal business loans, a feature that was necessary to quickly get the funds to the small businesses employees that needed them most. Instead, the program depended on the honesty of the applicants, and credit to the feds. They're going after these fraudsters, and they've caught quite a few of them, and we'll be talking about that. So that was the context of why this fell through the cracks. The government and the lenders were relying on, quote, the honesty of the borrower, and in this case, obviously, you had a dishonest criminal. That the 11 years was supported in this sentence. A significant sentence of incarceration is necessary to affect that calculus so that others realize the risk is too high and they will pay significant costs if they are caught. Actors like the defendant who seek to defraud these programs make it more difficult for administrators of government and other relief programs to get aid to individuals who qualify for it. And you're starting to see that backlash. Why did we do this? Why is all this fraud? Well, remember, the purpose of the programs is, yes, the money was lent to businesses or granted to businesses, but they had to prove it went to employees. This was an employee-based program, not necessarily a lender, a employee small business ownership program. So we're going to be talking a lot about these cases. The goal of this show is to give you a little bit more insight of what the extent of fraud and what they did. We'll talk more and more about the documentations, but this was a nice one to start off with in terms of the scope of the fraud. 11 years is a fairly significant, or is a significant sentence, and the sentence is reflecting that the feds are taking PPP loan fraud very, very seriously. Thank you very much for joining me today.
Thank you for joining us today for today's episode. If you like today's content, hit that subscribe button to subscribe to our channel and click that bell icon to get notified about our latest videos. Thank you again for joining us today and for supporting America's Main Street, one entrepreneur at a time. Catch you next time.